What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to give you an update on my rich uncle's account, but first, I'm going to show you this quote. This is one of my favorite quotes when it comes to dividend investing, and this is how I'm going to apply this to what's going on with my rich uncle's account, because you're going to be, your stomach's going to hurt a little bit. You're going to feel sick to your stomach. But this is what happens and why you have to be diversified. So I want to just start this quote by saying, you can only fight the way you practice. So as a dividend investor, you have to be very patient. You're going to have ups and downs with your stocks. It's always good to diversify your portfolio. And I'm going to show you why. And I'm going to jump to my account. So this was in April. Okay, I had $7,563.65 invested. I have 1,512 shares in 1,512.73 shares, and a total distribution of 682.74, basically in dividends that I've earned since I invested in these guys. So I made around, I think the total was 700. I'm going to show you what they said in an email, and I'm going to tell you how my account's looking right now. So I'm going to reveal to you what they said in the email. So this is what the BRIX REIT said. People that are involved with this, they said, we hope this email finds all of you in continued good health. In late March, we announced that we would be engaging in an independent valuation agent to appraise the three primary assets of the BRIX REIT. At that time, we were in the early days of the COVID-19 crisis, but even then we were warned that there could be permanent loss of value as our asset types of student housing, gyms, and quick service restaurants, notice all three of them really were impacted, were particularly vulnerable to shelter-in-place mandates that were just then sweeping the nation. Unfortunately, we couldn't have predicted it at this time, but I can't say the bug, but the pandemic has had a devastating and immediate impact on our assets. We regret to inform you that the portfolio suffered a severe loss of value as measured by the appraisals and the inability of the tenants to pay rent. The new asset value share of BRIX REIT is 32 cents, and the distribution has been suspended indefinitely. So I went from 5 cents a share down to 32 cents a share. The material decline of the net asset value, as well as the loss of rent, which was used to pay debt service, overhead expenses, and monthly distributions, is primarily attributed to the economic hardship experienced in our 24-hour fitness and Stadium View student housing properties. These two assets, which represent more than 90% of the REIT's total value, have experienced more than $9.5 million in appraised losses and nearly $1.3 million lost annual rent. Shortly after the national shutdown was announced, 24-Hour Fitness, the parent company that operates and leases gym properties, stopped paying rent on all of its more than 400 locations across the nation. We believe that 24-Hour Fitness will be soon filing for bankruptcy. Following the recent bankruptcy of Gold's Gym, we purchased our 24-Hour Fitness gym located in Fort Worth, Texas for $12.8 million, and the appraisal of the asset based on the likelihood that 24-Hour Fitness will be soon filing for bankruptcy, which was far less than the $6.1 million mortgage balance due on the property, thereby resulting in the loss of $6.7 million of our equity value. Additionally, our $5.9 million purchase of the Stadium View, a student housing apartment complex serving Iowa State University, was appraised at $3 million, approximately half of the original equity value. The asset remains largely empty at this time as its students immediately returned to their safety and comfort of family houses when Iowa State closed the campus. It is unknown when the university will return to normal operations and how returning student population will be impacted by recent events. Our $1.9 million purchase of freestanding Starbucks located near Kansas State University, despite being temporarily closed, appraised favorably slightly over $1.7 million. However, we have recently received a letter from Starbucks, as did all other landlords of properties leased to Starbucks, stating that it will be soon seeking 12 months of rent relief on every store it operates. Since March, the BRIX rate has only received rent from Starbucks, representing 7% of the monthly rents normally received. This significant loss of the REITs rental home, which is expected to continue for the foreseeable future, leaves a company unable to pay future distributions and provides limited capacity to fund ongoing obligations. We anticipate these factors will contribute to the REITs auditor issuing a going concern option for the REIT when we file our annual report for the weeks ahead. Should be noted that appraisals purchased by Cushman & Wakefield, an independent value agent, only represent an estimate of value based on the information available at the time. Only a sale or foreclosures of an asset can determine what a property is ultimately worth to the REIT stakeholders. Our advisor, which has agreed to waive deferred and future compensation, is in active dialogue with the restructuring agent representing 24 Hour Fitness in hopes that our particular location can be salvaged from any bankruptcy proceedings. If a positive outcome is obtained, which could take months to determine, then an appraisal or eventual property sale could result in a higher value than Cushman & Wakefield's appraisals. Equally, if the nation's colleges return to normalcy, then our student housing assets can once again see students renting apartments, which could result in a higher asset value for our holdings. Though we remain diligent for generating a better outcome than today's news, we remain pragmatic that a profound loss of value near term is unavoidable and that any potential recovery could realistically take 12 to 24 months or longer. Given the devastating economic impact the COVID-19 pandemic had over the BRIX rate, the board of directors is currently in process of determining its recommendation to our stakeholders. The value of operations available rate experiencing such hardship ranges widely from seeking new cash infusions to buy new investment opportunities to a decision to recommend an orderly liquidation of assets and subsequent unwinding of the rate. As a reminder, BRIX rate remains closed to new investments and redemption requests at this time. We anticipate that the board of directors will be finalizing its go-ahead recommendation within the next few weeks. Recognizing that this is a lot of information taken in process, we're going to conduct a conference call on Wednesday at 9 a.m. Pacific time. On the call, we'll provide additional information and context as an attempt to answer many questions as possible that we receive in advance on the call. We will ask you that you send any questions that you have to us at email, info@brixreit.com. The particularly negative and domestic impacts of the BRIX rate from the crisis are terribly discomforting. As a new fund with very few holdings, the two largest, which were virtually wiped out by shelter-in-place orders necessarily to mitigate the spread of the bug, the rate is an unexpected casualty. We regret to having the bearer of the bad news, as we understand the range of emotions that are being felt. Like you, we hope that you can improve on this situation as best and humanly possible. So, my response to this email, this is the important thing. This is why you diversify and just here's some information. Now, again, basically, there's no guarantees. These guys never gave any promises. This is going to be a huge test to these guys to see how they do after this issue. There is a strong vaccine that's going to come out. There's a company out there that is very strong in this vaccine out in Europe, and it sounds like by October the vaccine should be readily available. I think by then we'll be able to antibody test people to see how we're doing and everything, and to see who's exposed and not exposed. So, we're starting to go back to normal. Some universities are discussing people coming back to campus. So my response is I'm not going to sell. I'm going to hold. and I'm going to show you how much how much money I lost. So let me just jump real quick. So now my value is $484.07. I've had $721 of total distribution. The total amount of shares is 1512. And, there's a few things that I'm going to say to this. There's a phrase, buy low, sell high. And I mean, Realty Income took a huge hit. The REITs took a huge hit. I'm young. I mean, I'm investing. This is for the long run. I mean, I have a long-term goal of making $1,000 to $3,000 on my monthly dividends and $2,000 to $4,000 a month on my quarterly dividends. And I'm just, just because this is down does not mean I'm going to panic sell and get rid of everything. I think that would be crazy when you go from $5 a share to 23 cents a share. I mean, they were a very specific rate, and student housing, everybody got out. That really hurt. The gyms took a huge hit, and some of the diners and restaurants took a huge hit. So that's like the trifecta of misery right there for everybody that has invested in the BRIX rate. I lost about, I'm looking at it, right around $6,000, but it's going to take some time to repair. And when you're a dividend investor and you take huge hits like Boeing, say like you're an investor in Boeing, Boeing's down for right now, but everybody expects them to be right back. So over time, some of these stocks that suspended dividends, they're going to be right back there. So that's the thing that's a confidence booster for me is, the price per share may be down right now. When they start distributing dividends again, there's a possibility that I will be able to, get more shares in the long run, and the compound interest will start kicking in. I mean, I may have an option to throw in some money and get X amount of shares. I mean, if this ends up, getting to, distributing $1 a share, that would be like a long-term thing. But, even like 10 cents a share, I mean, I'll be rolling. So I'm going to stay patient. I mean, I wish I had, they let me throw in $500. I would do it. I would do it right away. I mean, I would, but you just got to be patient, and you got to be smart with your money. And this can happen with being an investor. So the important thing is you got to be diversified. I mean, I'm diversified in multiple sectors, but my real estate investment trust, EPR Properties, LTC, those guys all took a hit. Store Capital took a huge hit. I mean, eventually they'll be back up to where they were, but that's the nice thing about being a dividend investor versus a gunslinger and buying and selling trades. Things will eventually get back to normal, or you're still at least getting money out of it. So, I'm not too worried about this going down. They can still find new investments in other companies. They'll probably do another crowdfunding to try to buy more buildings and stuff. I'll be on the phone with these guys. And, if you guys want me to see what the plan is or what I heard from the meeting, I'm not sure. I think I have to work the 27th, but I will, follow up with these guys. And I have a lot of confidence in them. Just because they took a hit does not mean, that they're going to suffer. I mean, this isn't Sears. These guys are going to adapt. I mean, the nice thing with real estate is a lot of the real estate investment trusts, unless if you just have, malls or stores or something, if you're a rate in malls and stores, you're going to be fine. So this is a very specific rate that goes after student housing and other fitness centers and everything. And people are trying to get healthier. Gyms are going to open again. So, I don't want to see any businesses go out of business. It's sad to see, sad to hear news. I mean, some of these businesses didn't adapt and it's blowing up in their face. So, I'm not too worried, honestly. I mean, what would you guys do in this situation? Let me know what you think of that. I don't want you guys to feel bad for me losing money. I mean, this is the risk we all take. The money will fix itself. but I wouldn't worry too much. I'm not sweating bullets over this. I'm diversified. I'm diversified in Fundrise. I'm diversified in M1 Finance. I have an E-Trade dividend portfolio, and don't have any pity for me. This will make your balls go back to your inguinal canal, though, just seeing like something like this happen. But thank you again for watching this video. Make sure you subscribe and hit the notification bell so you don't miss future videos. And this is my honest opinion. I'm going to hold, be smart, and it will recover. It's going to take some time, but just let it go from there. Let the dividends reinvest, and that'll be the good thing. Just reinvest, let things go, let things fly. As I say with dividend investing, let it fly, let the dividends flow through you. So, hey, things happen, but it comes down to discipline and following your principles when it comes to dividend investing. So thank you again, and have a good one.